We've just had a major flip-flop in the CPI expectations, which sets a huge precedence going into tomorrow's critical CPI read. It's the first CPI reading of the new year, and the markets have set their expectations very, very clear. In this video, I'm going to share with you the market expectations, what I think is likely to happen, plus give you guys a game plan of how to play this move. Of course, not financial advice. If you want to trade along with any of these moves, you can do so using BYBIT or BitGET. I'm going to share with you findings from JP Morgan and other major players around what to expect tomorrow with the CPI reading. Let's kick off with core CPI, and as you can see, this has been falling quite nicely ever since June time, where it was sitting at 9.1, fell to 8.5, fell to 8.3. At this point here, you can see the gradient of the slope started to decrease. This got us worried that there could be some entrenched inflation. Then in October, we had this really good read at 7.7, nice big fall, and another big fall down to 7.1. This is giving Jerome Powell and the Fed the confidence that inflation is tumbling down as expected. Remember, we still don't know how much of this inflation is entrenched, and until we fall down to that 2% rate, we don't know for sure. Remember, the Fed's target rate is 2% for inflation. So they're going to want to keep hiking until you actually get a little bit below 2%, because once you stop hiking, it can climb up a little bit as well. So that's their target rate, is to keep inflation at 2%. But we don't know if there's 4%, 5%, maybe 6% underlying inflation. That's why this reading is really, really important. The expectation for tomorrow is that this 7.1 figure, the headline inflation, will fall down to 6.5%. That is what's expected. That's a major fall. That's another 0.6 fall here from 7.1 down to 6.5. And there's no room for the markets messing up. I'm going to show you why, because the markets are super bullish right now, and this is getting me a little bit worried because they're pricing in a lot of success right here. They're expecting 6.5 on the CPI, and there's so much room for this to miss to the upside. I'm going to share with you what the probability of those outcomes are and what I'm doing in the case of each of those scenarios. Now we want to take a look at the core inflation as well. It's important to look at core. As you can see with core inflation, that's been falling down as well. You can see that's coming from 6.6 down to 6.3, down to 6. This is now expected to fall another 0.3 at the same rate, down to 5.7. So we're expecting 5.7 on the core reading tomorrow, which obviously excludes the food and energy data point. So we want to keep an eye on that. Again, cannot afford a miss on that. Markets will tumble if inflation comes in hotter than the 6.5 I showed you or the 5.7 I showed you here on core inflation. Now there's one more important number which is seeing a really big flip-flop, and this is what I wanted to share with you. A lot of people are not talking about this, particularly in the crypto space, and that is the month-on-month readings. Remember, the CPI, the ones I just showed you, are annualized figures. They take it over 12-month periods. But of course, we've had major stuff going on over the last 12 months. So when you look at that, that number could be misleading. So oftentimes the more important number, which is more your run rate, is your month-over-month figure. So for example, the last month reading came in at 0.1 month over month. So you had 0.1 inflation. If you were to annualize that run rate, that means you were sitting on 1.2% inflation. Now, when I covered this off about a week ago, I shared with you that the markets were expecting this month-on-month figure to come in at 0. That'll be a major coup, because that's showing you, similar to how you had in July here, that in that month there was no inflation on the headline rate. Okay, well, there was nothing. It was just flat. It was running at the same rate. Now, there's been a major flip-flop because the expectations have now changed from 0% to 0.1%. So now markets are expecting, and this is where I'm saying there's no room for error. There's no room for error here, right? The markets are expecting deflation for the first time, okay? So we're now expecting minus 0.1, which shows an annualized rate of 1.2% deflation. And this is a major step in our battle against inflation. If we can see a minus figure, do expect markets to be excited. Now, before I go into my exact projections of what I think is going to happen and how I can play it, I'm going to show you where we're sitting at here on Bitcoin, because it's important to look at the pattern we're forming. Getting a slight red today, but Bitcoin has done really good here. I'm sitting on the 4-hourly chart. Look at this movement here, forming this reversal pattern, right? This double bottom pattern with a neckline at 17,800, which is going to act as serious resistance. Remember, we got resisted from this level here. Will we get resistance again at this level? No doubt we will. will, but that's where the volume needs to come in to break through this level. And it's no coincidence that we're edging towards this level heading into CPI. If I take the measured move from where we're at up to the neckline, we're 2.4% away from the neckline. So it's easy to see this gap being filled between now and CPI with the excitement. And then depending on the CPI, that's where we're going to find out, are we going to manage to get above retest and move, or are we going to see a fall to the downside with a poor estimate, with a poor miss on the CPI data? This is a beautiful example of how technical analysis marries up with macro. And you guys know I'm focused on that here on this channel. It's not just about showing you technical analysis and saying, oh, look, the price is definitely going here. You've got to do technicals, you've got to do fundamentals, and you've got to layer on top the macroeconomics. If you don't understand that trifecta, then you're going to struggle to invest and trade successfully in crypto. So again, if you guys want to trade these moves, you can do so using BYBIT or BITGET. Links in the description for both of those platforms. I do a lot of my trading on BYBIT, so just sharing that link there for you guys. It does support the channel if you do trade on there, but I'm not sponsored with them. Okay, now let's check. What I want to now check is this, which is the Fed rate monitor tool. And on the Fed rate monitor tool, I've shared this with you a couple of times now. This is getting me a little bit worried. Let me explain why. Because what you can see there on this chart is that 80% of the market is pricing in 25 basis points. And 20% are pricing in a pause. Now this leaves very little room for maneuver. If we do not get a good CPI reading tomorrow, we could see a lot of pain because the market is pricing in the best possibilities. They're pricing in 6.5% inflation, 5.7% on the core. They're pricing in deflation on the month over months. They're pricing in 80% of the market, just pricing that we're getting 25 basis points as if it's a done deal. But there's no guarantee of that. If we get a bad CPI reading tomorrow, you will see this metric, which I just shared with you, flip-flop, and that can come with pain. So even if we do get 25 basis points on February the 1st at the next FOMC meeting, remember, 80% of the market has already priced it in. So it's only that 20% which wasn't expecting it, which will give you a little bit of move to the upside. But also, don't forget, 20% of the market have priced in that they want to see a pause. So that 20% is going to be upset because they're expecting a pause. Okay, so let's take a look now together at the different scenarios. Remember, we're looking for that 6.7 number on CPI tomorrow. But what happens if we come in below 6.4? So if we get a reading of less than 6.4, remember market's expecting 6.7, this market will move. And I'm expecting the S&P, which we'll use as our gauge of how excited markets are. Remember, currently Bitcoin is hugely correlated to the traditional markets. We'd expect that to be up 3 to 3.5%. And this is using JP Morgan's guidance as well. Now, the probability of this happening is 20%, okay? The probability of seeing a CPI reading less than 6.4% tomorrow, which would be an amazing reading, is less than 20%. The most popular guess for people is we'll get a reading between 6.4 to 6.6, okay? Remember, I keep saying 6.7 on our expectation. It's 6.5 for our expectation on headline. So if we got our expectation right in the middle there, 6.4 to 6.6. If we come in this range, we can see the S&P move 1.5% up to a 2% green day, okay? And again, this one sits at a 65% probability. So this is the most likely scenario for tomorrow, is playing out a scenario where we get either a 6.4, a 6.5, or a 6.6 reading on the core, on the headline CPI. The market's moving in this manner, 1.5% to 2% up. The beautiful scenario is if we get anything less than 6.4, markets will be buzzing and you'll be seeing a 3 to 3.5% day on the S&P. Now, obviously with crypto, like I've just shared, forming a really beautiful pattern, a nice reversal pattern, do not be surprised to see crypto having a multiple of the day that S&P does. Particularly if you can break that neckline at 17,800, we could see a move which starts the move back to 20,000 for Bitcoin. So this is a really important figure we're getting tomorrow. Now, what's the negative scenario? Well, the negative scenario is if CPI comes in at 6.6 or higher. Right? If inflation comes in at 6.6 or higher tomorrow, which will give a 15% probability that it will happen, we will be seeing markets tumble 2.5 to 3% down potentially here on the S&P. Okay, remember, markets are pricing in that CPI has to come in right. The last thing they want is this to happen and this miss to happen on CPI tomorrow. I'm going to explain why. We have to remember that markets since the new year have turned their focus. They're so confident that CPI inflation is coming down that they're almost treating it as it's done. We're going to see it tumble down, and now we're going to focus on the labor figure, which is why when we had the non-farm payrolls and you saw that the wage growth was less than expected, we saw a really positive rally last week. And that's because markets are using non-farm payrolls and the labor figures as the bellwether of bull or bear mode this year, which is an interesting shift because last year was all about CPI. And towards the end of the year, like I showed you, we saw CPI start to come in line. So if we see a dent in that, in other words, if we see CPI surprise and becoming too hot, markets are going to be flustered because they're going to go, we were focusing on labor. We kind of assumed CPI was a done deal, but now we're seeing that CPI is still an issue and inflation has topped back up to 6.6%. So critical reading tomorrow, lots of different variations for crypto possible to play out. Let me know, how are you playing CPI? If you're inexperienced at trading, guys, either stay away from trading CPI. A lot of experienced traders do trade around these events, or practice with something you're willing to lose. That's how I started. I used to just trade with lunch money, and then I built that figure up and up as I got more and more confidence. So again, if you're unsure about TA, ijaz.uk/TA, I've made my TA course completely free. No other person online has done that. They charge thousands of dollars for these courses. I've put 10 years of my traditional finance experience learning TA within major investment banks, available for free. Use it. Links in description. Hopefully that helps you with your trading. Thanks for watching, guys. Looking forward to that CPI tomorrow. We will be live streaming it together, so make sure the notification bell is on. See you in the next one.